Hey there. So it's summertime, the tax season is finally behind us and sun is out, and maybe you're thinking, hey, I should go to that conference that I've been putting off, or maybe it's that networking event in another state, or it's a business retreat by the beach, something that helps you grow your business or that also gets you out of town. Now, the big question is, can you write it off? And can your company pay for it? And can you get the deduction? But more importantly, can you deduct it if the company doesn't pay for it? Well, the answer is it depends, because it depends on the company's structure, if you've got C Corp or an S Corp. So let's break it down here. A lot of business owners think, well, if I spend my own money on business stuff like travel, meals, mileage, I'll just write it off later, right? But here's the problem here. If you're running your business as a corporation, whether it's a C Corp or an S Corp, your business is a separate legal entity. It's not you. It files its own taxes, pays its own taxes, and it has its own wallet. It's a separate person. So it's you, it's me, it's the corporation, three person in the room. So for example, if you pay for something out of your own pocket, like a hotel or business trip or rent a car, and the company doesn't reimburse you, that's a problem. Your company cannot deduct it, and you cannot deduct it either. Why? Because the law changed back in 2017. Before 2018, if you were an employee, like an owner employee, if you're S Corp, and you paid for business expenses with your own money, you could claim a deduction on your personal tax return. It goes into your Schedule A 1040 as a miscellaneous itemized deductions. Yes, there were limits on how much you can deduct. You could only deduct anything above 2% of your AGI, adjusted gross income, but at least you got something. Started in 2018, Congress passed that Tax Cut and Job Act, the TCJA, and poof, that deduction is gone. From 2018 through at least 2025, this year, there is no deduction for unreimbursed employee expenses, period. So if your company doesn't pay for that expense trip and you do it personally, that's just it. Your expense, you stuck with it. The IRS doesn't care if it was for a business trip or not. This is not a business expense. Neither you or the business can deduct it. And this hits small business owners hard, especially those running small corps. And let's be real, how many times do you pull out your credit card and swipe your personal card to book a business trip or rent a car or grab a client lunch? And now, if you don't have a process in place to get reimbursed the right way, you're losing deduction left and right, and those dollars add up. So what's the fix? Something is called the accountable plan. So you may want to ask, what is the accountable plan? It's basically how your company reimburses you for business expenses tax-free, and the company still get the full deduction. So here's how it works. You, the owner employee, pay for something business related. Let's say a business client meal or a business trip. Then you submit a loan expense report, when and why and how, and you give the company the receipt. Your company pays you back and you're made whole. The business deducts it, you get the reimbursement tax-free, and everyone's happy. The IRS is cool with that as long as you follow the rules. So here's what you need to have in place. Number one, an actual written accountable plan policy. It doesn't have to be fancy, just something that says how and when expenses get reimbursed. Number two, receipts and records. Always, even for a mileage, you need to keep a mileage log. Number three, submit your expense report with a reasonable time. The IRS usually want to see reimbursements happen within 30 to 60 days. Always remember to return any extra money to the company. So if your company gives you $1,000 for a trip and you only spend $800, return that $200 remaining. If you keep it, it's taxable income to you. And yes, even if you're the only person in the company, treat it like you are your own employee. Submit a report, keep records, and that's what makes it legit. Okay, now let's compare C Corp to S Corp when it comes to reimbursement. C Corp are pretty simple. So if the C Corp pays directly or reimburses you properly, it gets the deduction. You don't have to report anything personally. Clean and simple. S Corp, on the other hand, though, are a little more sensitive. So if your S Corp reimburses you without following the accountable plan, that money can be treated as taxable wages to you. So that means that you owe payroll taxes, income taxes, the whole 9 yards. So just remember, if you have an S Corp, especially a written reimbursement policy is a non-negotiable. Otherwise, you're either losing that deduction or getting hit with extra taxes. So can you deduct that summer trip to a conference? Yes, if your business pays for it or reimburses you under an accountable plan. The answer is no if you pay personally and you don't get reimbursed. Unfortunately, because of the TCJA, the change of law in 2017, those days of writing off unreimbursed employee expenses on your Schedule A 1040 on your personal taxes are gone. Now, if you haven't set up an accountable plan for your S Corp or C Corp, I highly encourage you to do it now. It's simple, it's smart, it could save you thousands over the next few years. And if you need help setting up one, I've got a free template to get you started. Just click the link below. All right, that's it for now. Safe travels, make them deductible. Thank you so much for watching. I'll see you next time.
This has been another episode of our tax saving video series. If you enjoyed this video, please like it, subscribe below, and share with other business owners. You can find previous episodes and more information at www.bostacpa.com. Thanks for listening and have a great day.